Awesome. Thank you. So next here we want to go ahead and kick off with our presentation and speakers here. Monty, do we have Nicole Booker with Prosperity Home Mortgage online?
Stephen, you have the June agenda.
Oh, what is this? Hold on. Oh, I'm sorry about that. I do apologize. Hold on. Here we go. Excuse me. All right.
And Stephen, while you're doing that, we do have a few guests that have joined us today that I see are new. And so our typical protocol for those of you who are new is to go ahead and mute your lines. And so if you are in a position to do that, we would greatly appreciate you taking care of that. Thank you so much. Appreciate that to the highest.
Thank you. Thank you. Monty, are you on mute?
Yeah, is Jay McGee online? If if not, I'll go ahead and give an update and then let Bland come speak. Pretty much the other day, an update on the banking below 30. I think we had Congressman one. Oh, here he is right here. Hold on a second. He popped on and Jay McGee.
He just joined in.
Yeah, he just joined in.
Yeah, there he is.
Are you ready, Jay? Mr. McGee. So Jay McGee is he's gonna give like an update of what's going on. Are you prepared, Jay? Okay. Well, I started off. So um, they had a meeting on Channel 8 about banking below 30 the other day, several days ago. So it was Congresswoman Maxine Waters, Congresswoman Eddie Bernice Johnson, and Congressman Al Green. And they also had some panelists there to discuss that of being discriminated against in the southern sector. So some of us may not have known we've been discriminated against, and they made some key factors of things that have hindered our growth as far as being business owners and as well as being a people of color and minorities. And one of the things, one of the panelists, Tim Williams, who's the director for Williams Chicken, he pretty much said he was discriminated against of holding a line of credit of requesting for a line of credit up to 200,000, and he was denied. And he deposited anywhere between 180 to 200,000 a week into, and he utilized and said the bank was Chase, and they did not help him at all in the loan. But he mentioned that after several months, he went to and proceeded to another bank that lent him the money to, as well as gave him line of credit and then collateral against some of the assets that they hold. So that's one of the things he said that was beneficial. But larger banks didn't show them any love as far as helping them out financially, being a business owner. As well as there was another young lady who was a dentist. She asked for funds as well for her practice to stand out, as well as they told her debt to income was not sufficient enough to lend funds to, and she was denied as well. Um, Somebody had one question. Check out the 4-part series of how banking and oh, that's Jay. Jay, are you ready to speak now? you can take over. I'm just telling you some of the notes until you're ready to go ahead and take in.
Oh, sure.
Go ahead. We're ready for you, sir. Go ahead.
It's camera on. It's saying it cannot start my camera, so I'm not sure what's going on. But I'm just going to speak. I mean, so what let me see if I can get the camera going. It still won't let me. I mean, that's fine. So what I did for, I guess everybody that doesn't know me, I'm James McGee, President Chair of Southern Dallas Progress. I did work in banking for about 20 years. I mean, so I have a lot of knowledge as far as the requirements. I did post a link as far as that's a combination of the majority of the stories in which that have gone on prior to. I think that one of the interesting things about the attention that we are, having in Southern Dallas, and from like Monty mentioned, as far as Maxine Waters even being willing to get on the phone call and hear from the local community, that's actually a big thing. And then also one of the things that happened 2 days ago.
Hold on a minute, Jay. It's something going on. It's a problem. Yeah, there's a problem going on with the what about now? We're ready. Go ahead, Jay.
Okay. And then one of the things that actually went on that was very interesting, Chairman Powell is he's over the Federal Reserve Bank. I mean, so in a sense, he's the most powerful regulator, out there right now. And so that's like the big wig. And so one of the senators, I forget from which state, it wasn't in Texas. He actually mentioned, because he is from Texas, the banking below 30, story, the discriminatory practices. And Chairman Powell actually stated he was aware of that. That's been put on his desk, and he's going to look into that. Of course, he couldn't comment as far as, which bank in detail, but for him, and there was under testimony in that regards. I mean, so that's very, very, big from that standpoint to have that much attention, on it. In addition to that, on Monday of this week, the Consumer Financial Protection Bureau, and they kind of oversee the big banks and all the non-banks. I had a conversation with them about discriminatory practices, and I shared some data, like the top 25 lenders and things like that. And that was their enforcement attorneys. So the enforcement attorneys are the people that actually, find a bank, that actually find, mortgage companies. I mean, so we have a lot of attention, particularly, on Dallas, on Southern Dallas. The things in which I will say, as far as whether you're a realtor, a loan officer, or from a customer standpoint, put some of the complaints, in writing. I mean, I think that'll go a long way. And then there's going to be a lot more attention as far as on the home loan side of, how do we get, more loans, done in the southern sector. I mean, so there is a disparity. We do know there are discriminatory practices. I mean, so in the coming months, what we'll see, probably within a year from now, you'll probably see a lot of big fines being handed down by these regulators. And that'll include some of the banks and some of the mortgage companies. But I think it's something in which, we already kind of know, but it's good just to kind of shed a light on it and have the topic of a conversation. And like I said, the national attention is on us, right now.
So, Mr. McGee, this is Carol Holmes. A quick question. Are there going to be any announcements of any subsequent meetings like the one that was just had, so that we can plug in and stay informed as well?
The one with Maxine Waters and Eddie Bernice Johnson?
Correct.
That I do not know. That meeting was really last minute.
Okay. Okay.
I will say, not necessarily from that angle. I do think it'll be possibly like the CFPB may come in and want to speak, particularly, with us. And I say with us, NAREB and some of the trade organizations, as well, as far as your experiences, because they did ask me about that.
Okay.
One thing I can say is they made mention from the video, and you guys can go to YouTube and put banking below 30, and there are about 8 different videos you can watch. But one thing they said, if you are a business owner, we should have someone in contact that has a banking relationship to educate us on our business as far as growth. And a lot of us don't have that point of contact to help grow our business. And also, in that in the interview that they did was that developers know that when they build that eventually that they will price out people of their homes when they build. And they may mention that they should create a policy in place so the individual homeowners that are there, taxes don't increase. So that was something I thought was definitely tremendous information that they should do to help out homeowners as builders go in those communities to develop, that they're not priced out of their home. So
this is Pat Douglas. I was watching last night. Something came on last night as well, and they were talking about is it interstate or interstate bank or whatever. But you know, they showed the range of their lending areas, and as a result of that meeting that they had the other day, it looks like it. I think that's what they said. As a result of that meeting, that little their green area did go below, you know, they extended their area, which did include Southern Dallas. And I don't know what's going to happen. I don't know if they were going to, you know, have more. Well, they said, that's what the guy said, that they were going to have more loans available in those areas. And so they would not exclude the Southern Dallas area. So I don't know if that's relevant to, well, I know it did because that's what they were talking about. Were you all aware of that? Did y'all see that last night?
Yeah, I just posted the video from last night. They were talking, Interbank was one of the main banks initially mentioned in the story. They did stop redlining us. The conversation in which I've had with them is, I mean, it's fine to stop redlining us, but what are you going to do?
Yeah, that's what I was.
For about 7 years of redlining. And
yeah, that was my question.
Now, they haven't been open to that. I can tell you, Legal Aid of Northwest Texas and our organization, we're going to file, I think it's 20 complaints with HUD against the 20 various banks. Interbank is one of them. I mean, yes, we want them to stop redlining us, but you have to do something to make up as far as investments for during that time, and just not stop doing it. You have to make up. I mean, so we're going to be hopefully filing that within the next, 2 to 3 months. And I kind of keep Monty and the organization informed, on that.
Yeah. Hey, but we did email out a link. We did email out a link to share, to do a survey that James McGee had sent out, that Eddie Bernice requested. If you have been discriminated against, please complete that survey. And a lot of us may not even know we've been discriminated against. In a sense, meaning even me, I've been discriminated against and not knowing that. And it's based off zip codes where a bank loaned me funds even and had plenty of equity in my property, but they put a lien against both of my properties for the line of credit, where they had tapped in, instead of like the norm, like 60, 50, well, 80%, they were able to kept me at 50% on 2 properties where they took advantage. They were able to capitalize off of that 2 properties and have 50% loan, gave me 50% loan on that, on my property.
May I make
also, they did not come back. And one more thing. Also, they did not give me any information when I tried to go back to buy another property. They just left me stagnant and left it there. So that's where certain banks have done. They have done to me, where I feel like after listening to them, I was like, well, I maybe was discriminated against. And so that's something to think about. If that person did not come back to you to tell you why they turned you down, what's going on, or what you should do. So that's the type of thing she's looking for.
And before Ms. Redwine, I know you wanted to share, I wanted to ask too, do we have a list of these banks? I know we've heard, you know, a few names called today and maybe even in other things that we read, but do we have a compiled list of these banks that have done this redlining and discriminatory practices anywhere?
Yes, I'll put it in the chat and I'll email it to
Okay,
y'all.
okay.
Right.
So,
But
Okay, so I wanted
go
to make
ahead.
a suggestion,
Go ahead.
and that is that with Jay's leading, that NAREB work in direct relation to assembling what the requirements are. Jay's heavy in the mortgage industry. How about we combine our other mortgage bankers and mortgage brokers to come together and compile a list of what is standard as far as what is asked for, and then submit that to each lender regardless. I mean, just go ahead and as many as we can get, give them a deadline to return. And if they don't, make that public information. These entities refuse to provide the criteria, because where we are is with any kind of loan, you have no clue as to what they're using to decide if they will or will not respond. So if we pin them down and include the dates for a response and what they will do and who you can call in the event you do not get a response, we're there. One of the things that NAREB Dallas and North Texas get an A+ for is channeling so that there is a single point of contact, and that is critical. That's how you build, that is how you obtain power, is not by having someone say, call Margie, call Matthew, call so-and-so. And that's how we get the runaround. So if we can pin each and every entity into having one name, and that person is responsible, and don't be afraid to publish every Friday. These are the lenders, and this is what they're saying. We have social media. You all know how well that works. There's nothing like bad press. These companies spend millions of dollars for positive press. Just flip it. I think we do too much talking. I think we need to just be about it, have something specific that will tell the story, not just to us, but for all we know, it's happening to others in other nationalities, which is important that we include all people. We don't know what the criteria is. It's probably a matter of who they know, who's related to who. You know what that works. No matter what the situation is, if it's not a method that is consistent, let's just focus on that. Just focus on the fact that we're asking for fairness and consistency. Let's not say the race card, because you know that turns people off. We know it's the race card, but let's just fight them with their own, beat them with their own pencil.
okay. Well, Stephen, next up is Lane for Habitat. Miss Redwine's taking up most of the meeting. You mind coming, Lane?
Yeah, if y'all are ready, I'm ready.
Yeah, we're ready. Go ahead.
I love it. First of all, thank you so much, Monty and Miss Carol, for the invite to join y'all today. I'm so excited to see some friends on this call as well. James, first of all, I want to say to James McGee, the work that you and your organization are doing is incredible, is phenomenal, so critical and important. So thank you for that. We are following closely at Dallas Habitat and have been from the start. So thank you so much for putting in that effort. Really necessary. And, Monty, to your point, earlier on your comment about the importance of really preserving affordability for homeowners that are living already in the Southern sector and who risk, being pushed out as a result of gentrification. That's something that Dallas Habitat is advocating for as well on our end. And I'll share a little bit about our advocacy efforts today with this group as well. But first of all, let me just introduce myself real quick. My name is Blaine Cowart. I am the Senior Director of Homeowner Services here at Dallas Habitat. I've been with Habitat now, this month is 10 years. It's been a while. It's been a good long time. And I love the work that we do. I think, it's a wonderful opportunity always to be able to help first-time buyers realize the dream of homeownership. And I know that's shared among so many people who are here today. You know, Ms. Carroll invited me here to share a little bit about what Habitat does in our community, because I think there's a lot of misconceptions about what Habitat does and how realtors can engage in our mission. And I see here, like I said, I see some friends on the line. I see Mr. Keith Stone, who's been a longtime supporter of Habitat and a partner realtor of ours. Hey, Keith. And Ms. Kelly Houston, who also has been engaged with us as well. And so certainly there's some NAREB members who can speak to kind of what this partnership looks like from the partner perspective, not just from Habitat's perspective. I have a presentation, but I won't go through it. I think that's a little formal, so I'll just talk. But by all means, I'll share my contact info in the chat box. And if you have any questions as a follow-up to today's conversation, please reach out. But first and foremost, I would say most people know Dallas Habitat for the part that Habitat for Humanity is most well known for, and that is building homes. And that's an incredibly important part of what we do at Habitat, but it's truly just a small part of the bigger story of the work that we do. We do still build homes. We still build a good number of new construction homes and providing new inventory in the southern sector of Dallas. We do that through two primary programs. The one that most of you are probably most familiar with, that's our traditional Habitat program, whereby we engage community volunteers, and those volunteers work alongside our homeowners who are purchasing their house to help build their new house. Those homes, that's a very particular program for a very particular buyer. Really, we work with buyers under 80% AMI, exclusively first-time home buyers who are locked out of the traditional means of home ownership in the marketplace. What I mean by that is maybe subprime credit, it may be lack of savings, it may be insufficient employment history to walk into a traditional bank or mortgage lender and get an approval. And Habitat finances those homes ourselves. We finance those homes at 0% interest. 0% interest, that's right. Along with down payment assistance. We provide $8,000 in down payment assistance for everyone who buys a home through our program, and an additional $2,000 in closing cost assistance. So really, you know, we know that the biggest barrier for home ownership for a lot of the communities that we're serving are the upfront costs of home ownership. It's lack of assets. And so through 0% interest and the upfront assistance that we're able to provide, we're able to mobilize many of those families into affordable homeownership opportunities. But also, what a lot of times people don't know about Habitat is that we also build homes that are open to the general public, homes that Habitat does not finance, and that you don't have to be coming through Habitat's program to be able to purchase. These homes are actually listed on the MLS. And so you may have seen them before. They're not listed under Dallas Habitat. They're listed under our sub-affiliate, which is called Dallas Neighborhood Alliance. Dallas Neighborhood Alliance. And so those homes are targeted for a slightly different demographic than the volunteer build homes that we build. What I mean by that is DNA homes, we call that DNA, Dallas Neighborhood Alliance. DNA homes are available to individuals who are already pre-approved with a mortgage company and whose income does not exceed 120% of the area median income. So now we're talking about really more workforce housing, right? We're talking about teachers and nurses and, you know, really individuals who, you know, make a decent amount of money, but are still locked out of home ownership within the confines of the city of Dallas. Through the volunteer build program, along with our DNA inventory, we're building right now about 55 homes a year, new construction builds. We often get asked the question with DNA inventory, hey, Habitat, do you all use volunteers on those homes? The answer is no. Any homes that are listed on the MLS, these are all built with subcontractors, just like any other new construction build that you might see. And I know some of our realtors on the line today have actually listed some DNA inventory in the past, but if you've seen that inventory, then you know it's beautiful inventory. I mean, you know, standard kind of builder grade options and warranties and that sort of thing. In terms of where we tend to build, just to give you all an idea, in our volunteer built neighborhood, we're very strategic about the communities that we're looking to serve. Those neighborhoods that we're strategically working within right now include West Dallas, specifically the Los Altos and the Los Arboles neighborhood, part of West Dallas, which is around primarily north of Singleton, and then exclusively east of Hampton, very close to where our office is located. Also Joppy, off of 45 and Loop 12, between Loop 12 and Linfield, Southeast Oak Cliff, in various parts of Southeast Oak Cliff in the 752 and 6 zip code. And then of course, we also have a very large presence in Bonton and Ideal as well. So our volunteer build homes tend to be in or around those priority communities. DNA inventory sometimes does build in those same neighborhoods and sometimes also builds in other neighborhoods. So as an example, this fall, our DNA homes will be located in West Dallas, Joppy, and also Balch Springs. We have some lots out there that we'll be building on. And that inventory, just to give you all an idea, will range, depending on the location and the floor plan, between 175 and 240. Okay, and again, that's for individuals who are already pre-approved, looking for affordable inventory, new construction homes. And again, listed on the MLS, but you're always welcome to reach out to me if you have a buyer who's interested in learning more, and we can connect them with one of our listing agents as well. In addition to the part, like I said, building homes is just a small part of what we do. Really, in my opinion, one of the more powerful things that Habitat does in our community is preparing first-time buyers for homeownership. So we do this through our counseling program. Dallas Habitat is a HUD certified housing counseling agency. And on my team, I have a team of 2, soon to be 3, and we just hired a 3rd HUD certified counselor. And those counselors are currently working with between 200 to 250 first-time home buyers every year. And buyers that come through our program have to meet some general criteria for our program, and they can pre-screen themselves for our counseling program on our website. So we have a quick tool, it's like 6 or 7 questions, and they go on and fill that out, tells them if they're a good fit for our program. And if they are, they can immediately apply online to the counseling program. And the counseling program, the purpose of this program is to help first-time buyers become mortgage ready, whether that's going to take them 60 days or 2 years, right? Whatever that length of time is, we're in it for the long haul. And so we're always here to tell our partners, especially our realtor partners, because we know that you all are equally as passionate about, really equipping your buyers and empowering your buyers, especially your first-time buyers, to prepare for home ownership. We would say, don't feel like you've got to do it all yourself. There are agencies like Habitat who exist to do this very thing. This is what we do day in and day out, is support these buyers. And some of the methods that we utilize to be able to support buyers, we're pulling soft credit reports, right? So we're looking at their FICO scores with them. We're analyzing their DTI. We're looking at their credit history and helping them strategize to understand what are the priority items, if any, that we've got to pay off in terms of delinquent accounts, past due accounts. What are mortgage lenders going to look at that, these things are going to impact whether or not you get approved for a mortgage. We're also looking at savings. Of course, we're looking at, what our buyers' ability is to pay for down payment and closing costs. We work very closely with many down payment assistance programs here. Of course, everything from the city to the county to the state level, TSHAC and TDHCA. Like I mentioned, Dallas Habitat has our own DPA program. We work with FHLB and others. So we can always make that connection for buyers to make sure that if there is money on the table for them, they're accessing it. And then as we know, there's beyond the financial aspect, there is so much to learn about buying a house for the first time. Not only are Habitat home buyers first-time buyers, many of our buyers are also first-generation home buyers, and we take our role as an advisor to them incredibly seriously, right? To make sure that they know that they can come to us to get unbiased information on how to prepare for home ownership, but also about who the key players in their home buying team are, including their realtor, including their loan officer, their insurance agent, and the list goes on.
Hey, Blaine, well, 2 questions. People have that. They want to know Does the DNA home, does the buyer need to have a class?
Thank you, Ms. Parker, for that question. No, they do not necessarily have to have a class. Now, what I will say, many of our DNA buyers also happen to be utilizing first-time loan products. If that is the case, the lender often will require that class. Habitat provides that class. We are, like I mentioned, we're a HUD certified housing counseling agency. So we provide the HUD certified 8-hour homebuyer education class.
And another question they had is the program still open? Someone read it online that it closed May 2021.
Ooh, tell me where you found that, because it is not closed. It is definitely open. Yeah, no, our program is open. We receive rolling applications, so just on an ongoing basis. Let me type in real quick our website for everyone so we can make sure you're looking at the right habitat and the right information. And we are Dallas Area Habitat. Our website is dallasareahabitat.org.
Okay. Bland, we have one more question from anyone has one more question, because
Yep.
we have to let Ms. Redwine do the short sale, because that's gonna take up a little time as well. But Bland, we really appreciate all the information that you gave to us. Do you mind sharing your personal, or you just want to leave it at the website to go to?
No, I will absolutely share my personal information. Like I said, thank y'all so much for having me. I really appreciate it.
We thank you, Blaine, for accepting the invitation. We know that Habitat is a great partner for our realtor community, and then you know, we appreciate the annual big event you do every year of realtors and home buyers that you just did back in what was that, June? Mm-hmm.
Yes,
So,
ma'am.
so just so much to learn. And I do encourage people to connect with you so that they can learn how to be a preferred realtor. I'm working on it. I've gone through some of the orientation with you, and I just got to finish up my documentation so I can plug in and start doing some of the home buyer classes so that I can be a preferred realtor and then get some opportunities along the way. So thank you, Blaine. I appreciate you for connecting with us today. You're always so thorough. We appreciate it.
Thank you, Ms. Carroll. My pleasure.
Thank you. Thank you again, Blaine. Next up, we have Ms. Redwine. She'll be discussing the short sales, what we need to prepare ourselves for in the upcoming market.
Good morning. Good morning. And I have a question for Blaine that's associated with the short sales. So how are the current Habitat buyers faring in this COVID environment as far as making their payments timely?
Oh, for homeowners, not home buyers.
No. Those who've already bought a Habitat home, yeah, how are they faring?
You know, I will say we have an incredible mortgage team who has offered a ton of support to our homeowners. Over the last year, we spent a good amount of time doing a lot of loan modifications for homeowners who have, been in need. But I will say we were surprised to see that it was not as many homeowners who needed financial assistance as we anticipated when COVID began. So our delinquency rate is not far above what it normally is, which is already pretty low. But our mortgage team works very closely with those buyers to make sure that if they are at risk of default, that we get them on a payment plan or do a loan mod ASAP.
Now that's a good segue into the short sale segment I'm going to present today. And I believe that is pretty much what we're seeing across the board. The difference with Habitat is that because they have already established personal relationships with their homeowners, they've got a much better response than others, where the homeowners simply don't take the call, don't answer the phone, don't respond to the emails, don't respond to the mail. Having said that, what we're going to go over today has to do with short sales, but we must look at it globally from the perspective of what options. So I'm glad that Blaine just shared those options, because that is where everyone should begin. So first and foremost, you need to be familiar with what options are available to these individuals who are there's a threat that they may possibly lose their home, or they're having some kind of financial difficulty. So we want to start with the fact that your job, your fiduciary, is to take care of the client. So that might mean that you're not going to make a commission, but you're going to give them the information that they need so that they're going to be fine financially. So first and foremost, they have to look at the options, which is the loan modification. And most, if it is a government-backed loan, then they have been given these offers, which have been presented in written form. And if they held a conversation with anyone at the lender, via the lenders, et cetera. But there are extenuating circumstances which may mean that these aren't options. We're going to go over the options first, and then we're going to hit the short sale. And it's important that your potential seller is well aware of what these are, because if they become aware after you've started the process and after you've expended a great amount of energy, then you will have wasted everyone's time. So we got the loan modification option, and that would be a permanent change. Now, what's different about this loan modification is I actually had a student who was offered a loan modification previously when we went through the last situation, and was told that they needed to not make payments for 2 months in order to qualify and to sit tight. And they said, this is possibly what you're qualified for. However, if you make your payments over the next 2 months, you can't get in the program. So this individual waited the 2 months and then called. They said, well, we're not ready yet. She said, well, I need to make payments. They said, well, go ahead and use the payments we think you'll be approved for. So she did that. 2 years later, she finds that they have added, I asked because she decided she wanted to sell her home. And when I have her pull her principal information, they have added $36,000 for delinquency to the note. Now, we don't have those issues anymore because the government has a 0% situation. But what you may have is someone who has previously refinanced and doesn't realize that they have added a significant amount to the principal balance. Now, I have a client who purchased from me 3 years ago, and against my advice, he refinanced. He's now been relocated. He's asked me to put the home on the market. I look at the principal. It is $18,000 above because he refinanced twice. Now, he, like many clients, looked exclusively at what the monthly payments would be. And based upon that, decided to go with the refinance. So this is a reminder that if your clients speak to you about refinance, you need to make sure they know the key question is, the day after I refinance, how much will I owe? What is the principal? Because they ask, how much money will it cost me? And the lender says nothing, because they're talking about how much do I need to bring to closing? Because we're talking about owners who are looking at this from the standpoint of, when I bought the home, I had to have some cash up front. So they're not understanding that that cash up front has simply been added to the loan. Now, when we talk about those who were Fannie Mae backed or government backed loans, who have accepted one of the programs that was offered that's government based, they have a 0% interest. However, those payments are at the end of the loan. So we need to understand what's happening so that you can understand why a short sale may be the only viable option. So the payments are put at the end of the loan, but unlike a refinance, they don't refinance the entire amount. These individuals get to continue paying what they previously paid. Now, let me issue a caveat, and that is, this is only available if we're talking owner occupant. If the person has moved out of the home, then this program is not applicable. And the property at that point is going to convert, and they're not going to get the same options that an owner occupant gets. All right, now let's go back and over the other options that are given to someone who is considering the sale or is having a problem with making their payments. So we talked about the refinance. we talked about loan modification. Oh, we didn't talk about refinance. Refinance is when they're just going to take the entire note and come up with a new note. Now, lenders will try and get the owner to go with a 15-year note instead of a 30-year note. I'm an advocate against that all day, every day. And the reason for that is this. The effective interest rate when you're talking a 30-year note and a 15-year note is the same. And what I mean by that is if you paid off the 30-year note in 15 years, you won't have paid the interest, you would have paid the additional 15. So your effective interest rate is actually lower, and it's usually equal to. So if you just look at it on the surface, it looks as though you have a lower interest rate. But anytime you pay anything off early, you have a lower interest rate. If you have a credit card with 28% interest and you pay it off early, you're not paying 28% interest. If you paid a credit card that has 28% interest and you paid it off in 2 months, then you're not talking anywhere near that. You have almost 0%. If you paid it off in 30 days, you have 0%. So once again, I recommend my clients always go with the 30, pay it off with 15 if you can. The issue is that in the event that they come up with any kind of financial hardships, if they got that 15-year note, they can't roll it back. You got to pay that. If you have a 30-year and you have financial hardships, you can roll back and pay whatever the minimum requirement is, and you are fine. So you want to go. And I actually think the same way when it comes to auto purchases, 7-year, 5-year versus 3 years, because it doesn't give you any room to breathe in the event that there's a problem. The other is going to be the deed in lieu. And that is, they had some cash for keys programs before, which is where the seller voluntarily returns the property. And then the other is we have some that are going to opt for bankruptcy because it's not just the home, it's other issues. As a general rule, those who opt to go the bankruptcy route usually end up having to sell the home. Bankruptcy does not eliminate the debt on the home. It simply means that there is what's called a forbearance, and a forbearance is a promise not to do something. So the judge structures so that the lender on the home cannot foreclose, but there's an expiration date on that. And when that expiration date comes, they're going to have to make a decision. So do anticipate there will be those who roll into bankruptcy. As you know, there are stages in bankruptcy. And first they have to go to the reorganization segment. And given where we are now, the reorganization would be where they're going to restructure the loan. And of course, the lenders are working with them now. So they can use any of the things we talked about before, the modification, et cetera. Now, COVID has brought about a significant amount of divorces. So with that, if we have individuals who are leaving the home, and remember, we've got individuals who haven't made a house note in 12 months, then that's going to present a whole new arena. Now we're going to get into the specifics and the questions that one would need to ask so that we know whether or not this person can afford to sell. That's the question. Can the seller afford to sell? So before you get heavy in the game, you need some basics. So you're basically going to qualify your clients who indicate that they may be in financial distress. Now, initially, they usually don't tell you they're in financial distress. They just make it look like, well, I just decided I want to sell my house. This is where it's imperative that you do your due diligence. So I recommend that you start by having them provide you with the most recent statement from their lender. You start there. So it's important that you have credible information going in. Now, short sales are generally not going to be a quick fix, but if you go in under the premise that you're going to just look at what the options are and present your client with the options, then you have a much better chance of making it successfully across the finish line. Now, Some clients will have negative tax and credit consequences based upon which of these decisions they decide to make. There'll be some who take the loan modification and quickly determine they can't make those payments. There'll be others who have told stories out of school and they don't actually live there. Now, if they're not living there, we've talked about this before, it'll probably shake out in the wash when the taxing authority or when the lender is able to determine. We live in an electronic age, so a change of address will trigger. There are a number of triggers that will let them know that's not the case. That trigger, especially when you're talking the taxing authority, will also trigger a change in the tax rate from owner occupied to that of investor. So that will also add to what we're, so all these complications are possibilities. So you want to share with your client, if you know for a fact that they aren't actually living there, and we've got something else going, that any of these triggers could present a problem. Now, let's talk about identifying the property. So you're going to need to identify who is listed on the deed, what name. So you want to make sure the party that's talking to you about selling has the right to sell. So you're going to ask for a copy of the deed. Before you even ask, go to Dallas County, Rome, if it's a Dallas County property, or if it's Fort Worth, you're going to Tarrant County. If it's Collin, you're going to Collin County, and you're going to look up the deed. Now, you're just trying to see if it matches. Then if you see that there's two names, you're going to ask the question, who, if they say, oh, I own it, and you'll say, who was on the initial deed at the time of closing? Or if there is just one name, you want to ask, have you been married during the time that you've owned the property? Now, understand that there's a difference between state law and what a title insurance company will issue a title insurance policy on. So the issue is that they may say, I have total ownership of this property. I owned it before I got married, or I owned it, got married and divorced, or whatever the story is, doesn't matter, because the title company is going to ask for a signature from the party that homesteaded and lived with them or was married to them. They will probably try to say, oh, and the title company is going to want a copy of the divorce decree. In spite of the divorce decree, title companies probably still going to be asking for additional documents. And the reason they would ask is if the house is paid off, they'll probably be willing to work from a divorce decree. But if there is a note on the property, then remember, we got two key documents. We have the promissory note, which is an IOU that says I will pay the lender. That moves in one direction, and that's about the lender. And then we have the deed of trust. So when you pull the records from Rome, if it says deed of trust means there's a lien. There was a lien on the property at the time it was purchased. If the property's paid off and there was once a lien, you'll see a release of lien where they've released it and there's no lien on the property. So if there's a release of lien and the title company feels satisfied there was a divorce and that this person is the rightful owner, then they may not ask for a signature from the spouse. However, it's been my personal experience that they did. They, being the title company, did ask for it, at which time they found out that there was $20,000 that was owed the ex-wife upon the sale. And that was not reflected. That's one of the reasons they asked for a divorce decree, so that they can look to see if this is in fact what's happening. The same thing would apply if you have two siblings or two business partners that own the property. So all of those issues come into play. Now, when you ask your the seller, you're going to ask, are there any liens on the property? Now, the reason you're having to get all this information is you have to give, once again, we're back to, can the seller afford to sell? You have to know what debts have to be paid, because they're going to look at you and say, how much money will I make on this? Well, you can work your heart out, think you have some highly credible numbers, when in fact you do not, because you did not include all the liens. I've had clients that had $80,000 in credit card debts where a judgment lien had been issued on the credit card debt. That obviously changed, which changed the outcome. So no, she wasn't going to get 80,000. She was going to get $26.50. So these are the questions. Once again, the key component with, and this should really be what you ask with anyone who's asking you to list, is can they afford to sell? So the next component is you want to see if there is ask them, is there a homeowners association, which is actually called the Property Owners Association in Texas, but you're going to ask, is there one? Because if there is, you need to make sure you have clarification that they are current. I've had those instances. They were not current. They were seriously behind, which added additional funds to the amount that had to be paid, or we could not get approval. You could not get a resale certificate. You've got to do the work up front, because you, like I said, you can work your heart out, get to the end, and they won't issue that resale certificate, and there's no money left because this seller really couldn't afford to sell. Now, you are going to open title before you list for the reasons I just talked about. This is going to give you the framework. Now, when my client's saying one thing and I'm seeing something else, I will ask a couple of questions, but I don't say, well, I already checked and everything you're saying is a lie. I don't do that. I figure there may be extenuating circumstances, but I contact the title company, open title, and I give them all the information I have so they know what they're looking for, because we don't want anything popping up at the end when they get ready to issue that title policy and tell me that they can't. So that being said, you're going to share with them that this is what the client has shared, and I noticed this or that when I did just a preliminary cursory review of Dallas County Rome. So that will help you with that. So if they've had an equity line of credit, and there are many individuals who have done cash out refis, that cash out refi may or may not be reflected in Dallas County Rome or Tarrant County Rome, Collin County Rome. So this is why that title is important. They will come back. Sometimes I've had where the name was the same as someone else and it was showing liens that did not belong to my client. So you want to give yourself plenty of time to correct that. If they have an unemployment debt, this is a big item in this current environment. If they have a Texas unemployment debt, it's going to show up there. And that has to be paid. Unemployment debt is where they got a job, but they kept collecting the unemployment. It's going to show up, but it may not be in the public records. So that's why the title company is involved. Judgment liens coming out of COVID, expect to see those judgment liens. And that's where they just put their heads in the sand. They didn't go to court. Now they have these judgment liens that have to be paid. And then lastly would be mechanics liens for work done on the property where they ultimately couldn't pay. So you also need to know we're in an environment where we have all types of cultures and people from all over the world. And if we have a situation where we have what's called the foreign investment, then which is the owner is from another country, then once again, let the title company know, because that's a whole nother structure. And that's when the IRS lien situation shows up, where the IRS is showing that they have outstanding debt. This COVID environment is very different from anything we've ever experienced. So the opportunities for something to go wrong are great. The whole short sale thing is definitely not a bird's nest on the ground, and it does take your going the extra mile. So if you think your client may be originally from another country, you just want a heads up to the title company. I don't get into that. I don't collect social security numbers. I don't ask all those personal questions. I get cursory, and then from there, I go ahead and forward to the title company. Now, if that borrower has assets like real property, stocks, or a high salary, then your lender, when we do all of this, and we can show that the value of the property is less than the amount owed, the lender still may not agree to a short sale. Because once again, if the owner of that property who borrowed on that promissory note has the assets, they have stocks or a high salary, the lender's going to turn you down. So once again, before you think, okay, I've got this listing coming up, next step is we're going to have to work with the lender. You're going to help your client work with the lender. So once again, the kind of questions you're going to be asking your client is, are you current on your mortgage? Now, we're still wanting those quarterly statements, but we're asking that. You're going to ask, how many mortgages do you have? So we want to know, do you have one? Do you have two? Is your hardship permanent or temporary? Because that short sale, that question's coming up. Is there hardship that keeps them from making those payments? Is it permanent or is it temporary? You want to know, is this voluntary situation or involuntary? Is it voluntary as in you decide you just want to leave, you want to move? If they tell you, well, I've already, gotten my cash out of the house, we've already this or that, and I want to buy another house, just know that's a whole nother level of questioning that's going to have to take place. Because if they want to buy another property, just know your lender's looking at what happened with this property. So there could be a whole lot going on. Those of you who were around for 2008 know that was common. Individuals would leave their home, say they have a tenant, use a fake lease, and then go buy another one. Well, just know the new rules and regulations, they're on top of that. They're well aware. So things are very different from 2008 in that the criteria for obtaining a mortgage, whether it's first, second lien or whatever, are really tight. So we're less likely to have the situation we had in 2008. However, do not get yourself embroiled in any kind of shenanigans from someone who's trying to do the switcheroo situation. Now, all right. Just know that every lien holder on that property has to agree to the short sale. So even if you have one that's been making all the payments, the other one that's paying nothing, they all have to agree. So if it's a divorce situation, one of them is making payments, the other one's not, the other one refuses to talk, it's going to require a court order for the sale of the property, giving permission to one of the parties. Now, some programs do require, some of the short sale programs require the borrower to be 3 months delinquent. Well, that's pretty easy if they have taken the forbearance from the government. It's pretty easy. But if it's an investor situation, that's something altogether different. Now, even with investor, which is going to be commercial, which could be residential or commercial, even in those instances, lenders learned a lot from 2008, and them coming down and just foreclosing on individuals did not work well for them, because the properties were not maintained, they deteriorated, and ultimately the lenders lost a lot of money. So they're doing things differently now. So encourage legal advice of your clients. Put it in writing somewhere that you suggest they get legal advice. You're going to give them your advice and opinion, which is what we provide, but you want to make sure you specifically state that they get legal advice, and make sure you're doing that in writing. So you're going to do it via email. Now, if someone is in bankruptcy, then they're not going to be able to sell while it's in bankruptcy unless the judge specifically stated that they could. If it's not, don't waste your time. Tell them you'll see them on the other side. So now you can have a short sale without a delinquency, but you must or should pay less than 30 days from the due date. Now, this is just to get the parties started. In this current environment, though, they have whole departments that will work with you on these. Now, while we like to say that very few people should need a short sale, because of the things I've just expressed, divorce, already having cashed out, failure to maintain the property, foundation issues, roofing issues where they could not afford the deductible. And of course, when we're talking foundation, there is no deductible. Issues where they have under slab leaks. These are all things that have happened. Any of those issues where they could not afford to repair them, and they can't afford the note, could put them right into a situation that's prime for the short sale. If you have problems with the property, if there is an underslab leak, if you know the property hasn't been maintained, if it's for a VA loan, you can't sell a home via VA if they have appliances that don't work. So if you have any of those situations, you're not forced to go the investor route. Well, when you're putting the packet together, which we're going to talk about, for the lender to get approval for the short sale, you need to make sure you're mentioning all of these issues, that this property is not going to be able to be sold to an owner occupant because of these issues. Therefore, it has to be an investor, which changes the amount the property can be sold for. Now, you need to be smart enough on your listing that you state that. So I've had listings where I stated cash only, and I'll be doggone if I still don't have it. Well, what if I come in? No. Understand that if they do a renovation loan, if you decide you want to entertain possibly, you have to call the lender and ask the lender, will they agree to a renovation loan on a home with a foundation issue, or a home with, and you name what the specifics are. And then you have to know, expect it to be 60 days to get that through. And especially given that we have a contractor shortage. So, all right. Now, how is the short sale reported? Okay.
I'm sorry, Ms. Redwine, you got about another 10 minutes.
Thank you. How is the short sale reported? In most instances now, it can be reported as a foreclosure, a charge off. If it's a bankruptcy, they'll probably say bankruptcy. So when it comes to those questions, I would explain it to my client, but tell them that they need to speak directly to their lender. Now, I highly recommend that you suggest that they submit it as unrated when it goes in, so that it doesn't read as negatively. Ask that the removal of the negative reporting, if they've already got negative in the file where they didn't make payments, they didn't talk to them, then they can negotiate with the lender to ask that be removed. So the borrower can write this as a condition of the sale with the lender. Now, negotiating in terms of a short sale requires a law license. So we cannot negotiate the terms. Your client can do it. They can use an attorney, but we cannot be involved in the negotiation. I've just suggested what you might tell them they might consider, but we cannot be involved in that. Now, when you do your market analysis and comps, that's critical. That's going to be a component of the packet that goes into the lender. Now, you're going to look for both active and canceled properties. This is what's different. Normally, we're just focused on sold. You're going to look at active and canceled because active says this is what we could get. And then the sold says this is what they're going for. And then you're going to subtract what's wrong with the property. Remember to, the best thing is, go out to the state website, pull down the mandatory sheet that appraisers use, and look at those categories and use that to show what's wrong. Number of trees, maybe the other properties have a lot of trees, this has none, on and on. So if a property was sold at foreclosure, or if it's sold at the upper limits, then you're going to show that this one was at the upper limits, this is lower. So the value has to take into consideration what that second lien holder will accept. If there's a second lien holder, if that second lien holder says I need at least X amount, then you're going to include all of that in the short sale information for the first one. It is entirely possible you can't get agreement among the parties and the property has to go to foreclosure. That could happen. So bring to your listing meeting the minimum amount of information you need, which I went over before. And you want the seller's disclosure. You're going to ask them for a letter of authorization. And you're going to ask them to confirm that there is insurance in play on the property. That's real important. So there should be, but whether or not there is or not, I don't know. Now we have realtor short sale forms in MLS. You need to make sure you use them. They're self-explanatory. And I think that's pretty much the key components. When you, once all the docs have been submitted to the lender, then you want one single, there was usually one single point of contact. That letter of authorization, you need to keep it open so you can speak to title, you can speak to lender, you can speak to anybody you need to speak to, taxing authority, whoever you need to speak to on behalf of your clients. So the letter of authorization is critical. But once you have that, then you're going to work directly with the lender and they will tell you what you need. Generally speaking, they're going to want a listing agreement. They're going to want all of the documents we just talked about from your client. Try to get your client to submit in one packet, one single packet. If they do it piecemeal, it's going to be bad news start to finish. So you're going to keep copious notes and make sure you're documenting all communication with both the lender and your client. Stay in the loop. Okay. Once you get approval, then and only then should you be listing. You should not be listing a minute before that. So once you get approval, they'll say, this is the dollar amount we approve. Then that's what you list at. And then I highly recommend you leave it on the market at least 7 days. Try to get a bidding war going. Prepare a, I made up an Excel spreadsheet that denotes each line item. And then remember that only the seller owns that property to the end. So the seller chooses one of those offers. And that one offer is submitted in the packet. All right. And this is a different packet. So the first packet is to get approval for the dollar amount. And the second packet is when you're trying to get acceptance of a specific buyer. So with that specific buyer in that packet, we're going to include that you've spoken to the lender. The lender says this person, is strong, that they have the cash needed for close, blah, blah, blah. Lastly, remember that on short sales, you can't, and I haven't gotten anyone to answer this question, so you'll need to get it answered by the lender. Who does the option fee go to? Because on a short sale, the seller can't make a penny. They can't make anything. So don't get embroiled in that. But I still don't know. And we want an option period. A fee for that. So I'm not quite sure how to answer that question, except for that you have to find out what that lender says. And with that, Monty, I am finished.
Okay, I appreciate it, Ms. Redwine. Someone that had made mention about the HOA fees are definitely due. Could you elaborate on that again, Ms. Redwine?
Yes, if they're delinquent with the property owner association fees, then you can't get the resale certificate and you can't sell. I personally, and they wouldn't issue it. I personally have gotten signatures from my sellers and submitted it to the title company where I paid for that. And then at closing, and this is a reminder that if you have a borrower who's a veteran, they cannot pay for that termite policy. The veteran cannot pay. And when you're talking a short sale or foreclosure, there's no one on the other side to pay it. So once again, open your purse, it's on you. You need to prove that you paid it, make it a line item. But there has to be proof that you paid for those items.
So Ms. Redwine, I just wanted to ask a quick question on the option. It got me thinking when you said that the seller is unable to make any revenue off of this. So with the new way that our option fees are being handled, they're made payable, you can do 1 or 2 checks made payable to the title company. Now, traditionally, if this particular buyer does not pull out of the deal, then that would be treated as a credit that the buyer would secure, or would be a line item as a credit on the closing disclosure. The only risk would be is if the buyer pulled out of the deal before the option period. Am I correct?
You're 100% correct. The challenge is, I don't know how that check would be cut. I have no clue.
If someone pulled out.
Exactly. I have no clue how that would work. That's just one of those things they haven't. that they just don't answer my questions.
I got you. Okay.
But you're correct.
Mhm.
And I have a question, Ms. Redwine. When do you think this short sale may occur? Do you visualize it occurring when people may be in default within the next 6 months?
The divorces are underway. So it depends on the property. It depends on the property. And I tell you what, a lot of these people who bought these houses at the peak, I actually have, I got a call from someone who bought a house in October in Forney, brand new, 360. And he lost his job right after that. And he's taking a job in another state. Hey, he's upside down. So his options are a short sell or lease it. That's all he's got. So there are varying circumstances. So there will be times when you don't realize that's the option, but when you get the call and after you do the due diligence I explained, that's how you're going to know. They often don't know that. They don't know they're upside down. And many times, like I said, they're lying about how much debt there is associated, and they don't understand the concept of a general lien, which is the debts they personally owe on the property. That's foreign to them. So just by preparing, you're going to run into it because it's there already. It's there. All these people use credit cards during before they started getting the forbearance or whatever, and all these people that decided to take their stimulus check and go buy Gucci or a bag, okay, it's going to show up. Know it.
All right, appreciate you. Any more questions for Ms. Redwine? One last question from the body. Since we have none, thank you, Ms. Redwine, for taking time out to update us and inform us on the latest news and educate us. Thank you. Guys, we still are taking membership for NAREB. We're trying to increase our numbers on a national level. So you can go to narebdallas.org to become a member by going online, narebdallas.org to become a member if you're still interested in being a part of the body as far as the continuing education we're doing. And last, if you missed out on our happy hour event, you guys missed a treat. Women Council and NAREB Dallas, we met at the Cameras Hotel, and I think everyone was happy to reconnect after a year and a half of not intervening in public. So I think we're working on we got two things going. Next week is our national conference in Cleveland, Ohio. So a couple of the board members a couple of the members are going to the conference in Cleveland, Ohio. Also, we may be working on another happy hour in September, and we are working on a Christmas event in the month of December the 17th. And one thing we are doing, we are looking for sponsors. So those are some of the things that we have coming up. So we're looking for happy hours in September. We're going to do another one, and then we're going to do a Christmas event around December 17th, which is also our little gala as well. You like to say something? This is my chair, Pat Douglas. Go ahead.
I just want to remind you that we do have a special going on for membership. You might want to share that with everybody, and they can tell others that we do have a special right now.
The special is going to go up until really this Tuesday. I think we reduced it where if you are a broker, it's $185. If you are just someone needs to eat some stuff. If you're a broker, is $185, and if you are a member, it's $85. So we have reduced the fees because we passed the point of being financial with TARAB. So
Monty, a correction on the brokers. It's $150 for brokers, and affiliates is $120 on this membership special.
Okay,
$125 for affiliates. Yeah, $125 for affiliates and $150 for brokers, and
okay.
Yeah, $85 for agents.
Yeah, sales agents is $85. Yeah.
Okay. All right then. All right, and I appreciate. Thanks you Al, for correcting me, but that consumes our meeting for today.
Before you
Steve,
go, Monty, couple quick things from Women's Council. We too are doing membership, and I put our link for membership in the chat. As an affiliate of NAREB, we are the education arm, and our memberships are just $50 per year. And we are always in partnership with NAREB Dallas. We're also going to be doing some scholarships. And if you have or know high school students that are recent graduates, reach out to me. We will use the month of August as securing the students. And then come September, we will highlight the students here on our September meeting. So if you do know students that are graduating from high school or have graduated, get in touch with me and I can get the applications out, and then we can do the interview process, and we'll be happy to help and serve. That's just a really big thing that Women Council loves to do, in a way to give back to our students and our members in our community.
okay, all right. Thank you, Carol. And next month we're in September. I mean, we're in July. Man, it's time rolling. But we will have next month. We will have someone talking about donating blood at our next upcoming meeting. So be on the lookout as well. So we appreciate you guys taking time out. Steve, you mind praying us out?
Yes, President Monty. Dear Heavenly Father God, we thank you for allowing us to have this wonderful meeting today, Father God. Thank you for the speakers that were presenting the information today to share, to help grow and to nurture this community, and allow us to continue the action-driven mission that we have for the body that we serve, Father God. Just allow us to continue to grow, and as we move forward into next month and as we carry forward the end of this year, Father God, just continue to work on our business, Father God, so that we can do a better job working on our business, Father, for the other people that we can serve and be an olive branch and an extension to ensure that, we have everything that's necessary to our tool belt to go out and be an advocate for home ownership. We love you and we thank you until we meet again. And for those that are traveling to the meeting to Cleveland, Ohio next week, Father God, give them traveling grace as they go to and from. Father God, be a representation of this Dallas Association of Realtors chapter, Father God, and allow us to transcend the information, what we're doing here in this organization, to those that are across the world. We love you and we thank you. In Jesus' name, we do pray. Amen.
Amen. Thank you. And you guys have a wonderful day. Take care.
Bye.
Thank you to all my students who
Thank
jumped
you.
on today too. I put a note to them in the chat, and we just thank you. I see several of them have joined, so be sure, students, to connect with me later on. Y'all have a great day.
Thank you, guys.
Take care. Bye-bye.
Bye-bye.